Good night, everyone. Good night. Welcome to my first trade breakdown. I am Noble Investor, Futures Day Trader, one third founding member of Triathlon. I'm a primarily trade gold. I'm starting this journey to just highlight my skills, my knowledge, and to bring forth everything that I've been working on to life. So, want to start off posting with my trade breakdowns to be able to go into the future and just be able to look back on everything as I progress in the next weeks to come in Q2. So it's currently 12:19 a.m. as you can see on the charts. We have previous day high right here, previous day low, drop down on the 4 hour. Let's make necessary. Okay. So a bit more neat and tidy. So liquidity. So on the chart we can see quite a few PDRAs and confluences. So we see we have a 4 hour fair value gap right here. And we're on the 4 hour time frame. We can see liquidity was resting right here. Liquidity was resting right here as well. And we currently have liquidity resting above here and here along with here. So what we're noticing now on the charts is price has been bullish from April 7th. It created a higher low, created a higher high, and traded back down to create a higher low. So potentially what I want to see happen from this area, from this imbalance in price is after this, hold on, since we've got the confirmation of the higher low, higher high, which took out these highs right here, proceeded to trade back down within the range of this higher low, from this low to this high, to trade higher, fill the imbalance within this 4 hour time frame, and then proceed to trade to these highs to create a new higher high. So ideally, this is my trade setup, my overall projection for the market into tomorrow or into next week, Friday. So let's see how that will play out. However, let's get down into price action. So now I'm going to drop down on the 1 hour and basically rewind back price. Or first, before we even do that, let's proceed to marking out these relevant PDRAs. So we have a fair value gap on the 1 hour that distributed price lower. We have, this was the 4 hour fair value gap as well. We can see that there was one right here. So we just refine this to just highlight this one. Even though on the 4 hour, it's more important in I would say in a markup sense to have it highlighted as a 4 hour fair value gap and then be able to add an additional zone, a zone that was previously tested. So it got mitigated. So let's just add fair value gap and let's put dash MIT and let's use a red. So we know that this zone was previously mitigated where price broke above these highs, broke above these highs right here, with an imbalance and with an inefficiency, and then price failure to trade above these highs again and continue to trading up. So we've marked out the relevant P areas. Also, we can see along with this fair value gap, we have one right here that we come across. No, it's inverted. However, it creates this zone, this overlapping zone where a fair value gap and an inversion overlap concept is a very high confluence area, such as a BPR. So let me just highlight this zone in yellow, text BPR. And this stands for balance price range for all ICT traders. So I trade CRT model. I trade a CRT model on gold. My analysis involves first structuring, getting an idea of what the daily profile is doing. So I have to first study the wicks of the previous days to have an understanding of what's the overall direction of price. For the previous days, we can see that price has been trading higher, sweep this high, closed in the body, filled this imbalance, and then proceeded to trade out of it. Right here, we saw that we had a sweep on liquidity on this daily low, which then proceeded to a strong bullish candle back up above the closure on April the 2nd and the 1st. So we had a lot of bullish indication that price is expanding. Now, in trading, before I want to see the daily profile deliver bullish, price has to take liquidity. And as such, what I want to see is on the daily candle, it create a wick to the downside. This week, the purpose of this week is to get liquidity, is to take out previous sellers to fill imbalances in the market so that you can have a proper body candle that has a wick and has a body that is full in volume, which would then represent candle movements such as this on the charts. So I would like to see sell side be taken out before I go bullish. So now coming into the start of Asian session, there's a lot of volume that is traded during the Asian session. Very good trades can be taken with patience. And as such, you're gonna go through what occurred today. So as we already know, this zone is a high confluence. We had an inversion, a BPR, and a 1 hour fair value gap as well. But not only that, we need to mark out 1 hour highs for price. So I believe yes, this was 5 p.m. So this was 1 hour high. This is the next one. Also on the 30 minutes. So it's very important that you get, or I like to develop my trades reversal or my reversal trades off a 1 hour and 30-minute time frame, and then use a 3 minute and 5 for confirmations, primarily the 3 minute. So now going down on the 3 minute, let's be able to can just tag market open. So the market open right here. We had, let me do a split chart. Okay. So over here we have the 30-minute time frame. And over here, we're going to use the 3 minute. Now let's delete this line. So what we can see when price open at 6. It took out a 30-minute high. It took out a 1 hour high as well and traded into a BPR, balance price range. And this can be reflected even more clearly on this side of the chart, where price went in there and heavily rejected. A strong open to that range and heavily rejected. Now, during this open, we had this gap, this market gap, which is of significance to price. It's a significant confluence as to the outlook of price. This inefficiency, this area right here. So ideally, what could occur after price testing an inefficient zone and retracing back to its opening gap is it could use the gap as support, which it did, where within it quite a few times and wick, traded back up, wick, traded back up until it broke and closed above the low of the inefficiency. At this point, on the 3 minute, I would use this inversion of the gap that occurred right here as my first confirmation that sellers are now in control of the market, because I developed my strategy around one, liquidity being taken, an inversion, which should have been an inversion of this gap, and also a change in state of delivery, which should have been right here, given that this initial swing point took out these liquidity. So once price broke up below, close below this area, it's now a change in state of the market direction from bullish to bearish, because this is a structural point for the bulls to continue. Hence why this area could have worked as support for price. Now, analyzing price again, we see that after the inversion, price started to distribute lower. It retested this zone, which would have been an order block. The 3 minutes, a much clearer price action would reveal. Yeah, this would have been the best entry. The current model that I am imposing in the market is 1-to-1. Now, ideally, when I'm looking at this chart, this would have been the most optimal entry, a 1-to-1 covering this high and targeting here. As we can see that after getting the entry, price would have delivered right here with a little bit extra down towards the 4 hour fair value gap before taking out minor sell side liquidity on the 15 minute. So where I would have projected my 1-to-1 to be would be influenced by this 15-minute low along with this order block. So price ideally won't just run. It could, since it already had liquidity from the 1 hour highs trading into the balance price range, it could have most definitely violated this order block and proceeded to trade lower to take out this sell side low on the 1 hour chart right here. which is resting above the 4 hour fair value gap as well. Now, the 4 hour fair value gap would have been my point of interest for the night. It would have been my draw and liquidity. So ideally, I want to take sales, being sales position towards my draw and liquidity. Given that's the case, we're looking for sales. The first sales opportunity presented themselves and had hindrances when it took out this minor sell side low, which gold is notorious for taking out minor sell side that is resting just above a major PD area. It can reverse from these areas to take internal liquidity to then distribute lower to the ideal PD area, which would have been the 4 hour fair value gap. So that was the trade. Simple, very easy setup. Come in, you wait for the sell side liquidity or buy side to be taken. In this case, where ideally I wanted to see price go lower to trade higher, but a first indication also that the drawn liquidity could be achieved is that it would trade high first to trade low, which then after this move, it initially painted out the overall market or the session bias rather from Asia. So Asia opening high means that it wants to then take liquidity to then proceed to trade low into its own session or into London, possibly London opening up to give a continuation or consolidation, and New York being a liquidity run and London lows to then trade back to Asia highs above here. So that's a very high possibility. But again, simple trade that could have worked out. You get your one-to-one structure in the trade also of this inversion, this 30-minute CTI setup where we had a nice candle closure and then opening and distribution down towards the draw and liquidity. The market indeed got a bit choppy after it took minor sell side, but notice how on the 30-minute we're analyzing price, we had body closure still not closing above these highs, which should have initially been the inversion of the gap. Even to now, we're not getting body closures above, which we may, but it could be just a week again. But we'll analyze that price for the future. But simple setup here on gold, trading CRT model inversion with the change in state of delivery. And yeah, liquidity inversion, change in state of delivery, entry, and then you target your system, your model trades, targeting liquidity. So we know we had 15-minute lows, which if we could have projected lower, would have definitely gotten 1 to 1.3. If we were determined to hold the trade, we could have gotten a full extension down to the consequent encroachment of the 4 hour fair value gap at 2.3. And then by trading our stop loss, let's say we want to fully pull out at around 75% of the position, we could have walked away with a 2.7. Thanks for watching my video. I'll be doing more breakdowns of either session every night until we've just built up our community. And yeah, this is my breakdown of MGC. Thanks for watching and do have yourself a blessed day.